Order, yes. How was the expiry, by the way? Amazing. So, I've picked up a interesting topic because lately amongst the traders, can you just increase the volume a little, if it's possible? Lately amongst the traders, this has been a very valid question, specifically after uh, there has been a SEBI report which claims that the number of profitable traders are very low. How many of you have read that? Just say yes. Just say yes, yes. Amazing, amazing. Because the reason why I'm trying to make you awake, because after such a volatile market today, we have all seen, it became very difficult. So I've been hearing all the wonderful speakers who have been coming over here. I've been hearing the commentary also. And in fact, for a brief moment of time, I was there for the live trade also for 6 minutes for those people who were there. At that point of time, I was 8% up on the capital deployed. And a lot of people said that, the expiry was tough. No doubt, expiry was tough. But what if I say that, and I'm going to show you orders and everything, and then I'm also going to tell you why I'm talking about all these things within the 5% thing, because definitely it was tough, but money could have been made. And why? I'll prove the facts, I'll prove it because action speaks louder than the words, and that is precisely what we're going to talk about. So this is exactly what SEBI came up with. SEBI came up with that 9 out of 10 individual traders in FNO segments are making losses. How many of you agree with this thing? Just say yes. But don't you want to change this thing? I'm pretty sure a lot of you sitting over here simply want to change that, right? Yes or no? Absolutely. So I'm going to give you just few simple rules which are going to definitely help you up to change this thing. But before we jump onto this thing, let's talk about how we could have used those rules today. So, although for the 5 minutes I had already shown my positions, but let me just come over here. And it's a 15 lakh account. And as you guys can see, had clocked in 2,85,000. That is close to 19% on the capital deployed. Now, obviously, there would be few questions. Did you do buying or selling? I did both. Some people will ask, like Ashish ji was saying that scalping today was a little tough. But I would say this is the beauty of the markets. If someone is making, someone is losing. If someone is losing, someone is making. So even with scalping, some people could have made money. I'm not saying it's easy, but yes, there were a few scalps. I'll show the order book also. The problem is, the first biggest problem why a lot of people, they fail to come in the top 5% is, we often get persuaded by a lot of gossips. I'll give you a simple example. In the last 5-6 years, it has been said on social media that only option sellers make money. Haven't you heard? Yes or no? But in a lot of trader carnival, we have already seen ourselves, there's so many option buyers who are making money. So that's one myth which a lot of people are having in a head. Then another thing is, only and only price action can make you money. Have you heard this thing? Yes or no? But particularly, whatever money I made, I never claim I'm the best trader or something. I'm a very normal, very simple, small trader. And this is 115 lakh account. There's a separate account also. But I would say that I used indicators also. I've been profoundly called as Dr. VWAP by a few people because on YouTube channel since a lot many months, lot many years, even when a lot of people didn't know about the retail Janta, didn't know about VWAP, I used to advocate. He's nodding his head because he was watching me at that point of time. So VWAP is an indicator. I did use a bit of moving average. I did use a bit of volumes. So you got to understand the very first thing is in the belief system. A lot of people start believing that they have set their own limits, that this is the only limit. You first need to crack that limit. Unless you're not winning the battle over here, you can't win the battle in the game. How many of you agree with this thing? Just say yes. How many of you agree? Louder, louder. So the first thing, and how you can change it. So it's try to start using social media into a different direction. So for instance, while getting envious of how come this XYZ gentleman is making, let's say 50 lakh, 1 crore, 2 crore, whatever. Instead of that, just think that, okay, even if there is a slight possibility that someone is making 1 crore, that means at some point of time in my life, at least I can also reach over there. That should be the first thing. So a lot of people, why 5%? It's very difficult to come to the 5% is because our belief systems are wrong. And that is because we are brainwashed in that manner. Every time we see someone who is losing out the capital, it's not because the market is wrong. It's not because the operators are placing everything against you. Come on, let's just think from this perspective. You are punching an order with 5 lots. Do you really think that operator would be after that 5 lots only? No. You got to understand. How many of you are getting this point? You know, we even at the starting stage, even I have given those excuses that, arey yaar, this operator is trying to eat my stop loss always. But in my humble opinion, yes, stop loss hunting happens. A lot of things happen, but they are not just after my 5 lots. They are sharks. They will never be satisfied with small things. So the very first reason why a lot of people fail to come into the top 5% is change your belief system. Understand the potential. And I'll give solutions for everything. The first biggest solution to all of you sitting over. How many of you want to know that just say I. Just say I. Simply just go and read a good book. The name is The Market Wizards by Jack Schwager. Go home. Go and read the book called Market Wizards by Jack Schwager, and you would understand there are so many good traders who have proven track records and they have done phenomenal work. Now, some of you might ask that why aren't we promoting Indian traders? Who said we are not promoting? Platforms like these are essentially meant for the same reason. And also we got to understand something. A lot of people keep asking, why Indian traders are not being covered by international markets and all those things. Let me tell you one thing. Chicago market actually many years back. They have so many years of experience. US market got all these things. Their amount of people who have already entered the market has been quite significantly high. India is also catching up that trend since the last couple of years. So we were late into the party, but we are just getting started. How many of you agree with me? Just say yes. So we are just getting started. And how many of you think in the next decade, you guys would be one of those market wizards? Just say yes loudest. Perfect. So the first thing you got to understand is you got to change the belief system. Now, quickly into an order book, and why? This will be a very quick thing, executed orders. So I just want to break the myths. So for example, this was probably the last scalp which I had. And the last scalp, as I go into the order details, you guys can see this was, if I go into the order history on the exchange, 3:15. Can you guys see the time over there? 3:15 was the time. And then there are people who say that you shouldn't ever buy options at that point of time. I'm not trying to defy. Obviously, there are risks. Because there would be theta decay. You can go against a lot of things. There could be an n number of things going wrong against you. But my point is, sizing. If your risk management is as per your capital size, a lot of things are into consideration. There is no limit to yourselves. You can make money through buying. You can make money through selling. You can make money through futures. You can make money through options. You can make money by option selling. You can make money through commodities. You can make money through cryptos. You can make money irrespective of the segment. Are these 2 points clear to everyone? Just say yes. Louder, yes. So those 2 points are clear. So now let's just forget about the expiry for a while and quickly come up to this thing. One of the reasons why a lot of people, specifically intraday traders and swing traders, are not able to come up with what we say is the real profits, because we don't understand the maths of stock markets. I'll give you a very simple example. For an investor, let's say if that particular investor had invested 1 lakh rupees in a beautiful stock called Yes Bank and DHFL. So now let's assume it is DHFL. How many of you had invested at some point of time in DHFL? Can I see some? Okay. You guys are being honest. Amazing. So let's say you had invested 1 lakh in DHFL, and across this thing, you are seeing your portfolio coming down, 90% down. If somebody met you in a party, 1 lakh was the initial capital, you have lost 90%, your shares are 90% down, you would say how much down you are? I am down by 90%. But you don't understand the maths. In stock market, now to recover from that particular fall, do you really just need 90%? No. And this is basically the maths. If you're losing 5%, to again come to a break even, it is 5.3%. If you are losing 10%, it's 11.1%. And if you are losing 90%, my dear friends, how much percentage do you need? 900%. The very first fundamental you got to understand if you really want to come into the first 5% is try to understand the maths. And that's why limiting your drawdown based on your capital is very essential. Now, a lot of people get shocked. Oh my God, this person made a loss of 1 crore. But please try to look into his capital, his risk appetite, his style, the way he's diversifying, his temperament, everything could be different. For you, probably that 1 crore is big. For him, it's just like, it's a normal thing. Are you guys getting? Yes or no? So first, instead of comparing that this 1 crore could be a big blunder for someone, just start looking at yourself and please follow this maths. Because every time you're coming into a drawdown and then you feel. So what happens? Now I'll tell you an option buying. So you buy an option for 300. You hold that option till it goes to 100 with the expectation that now one fine move will come and this will go on 400 and 500. And the biggest problem is one fine day that will happen. And by mistake, if you have taken that option, your habit is spoiled. Why? Because now thinking of that one day when that 100 rupee option became 400 rupees, every Thursday, you're going to repeat the same thing. And then you're going to ruin your entire capital. So please, as an option buyer specifically, don't play with gimmicks unless it's a part of your strategy. Is it clear to everyone? Just say yes. So that's one. So try to understand the maths if you want to be the first 5%. Another thing, it's very easy to say that, oh, in stock markets, I'm losing money. Stock markets are losing money. I'll be very blunt over here. We had couple of good sessions so far. We had couple of good this thing. Please don't mind. But ask yourself, just look around and you would yourself realize that there were only, let's say, couple of people who were very serious and they were attentive throughout the sessions. Will you agree with me or not? Yes or no? What you didn't realize is each session, just one moment could be a defining moment for someone. So I had a student of mine, even I am surprised. He said that I attended one of your sessions and now every year I'm able to plan a trip to Russia with my family thanks to you. And I'm wondering, oh, I need to watch my sessions again. What did I deliver over there? And he just picked one simple line around VWAP, which I explained to him. And he is like, that completely changed my life. So problem is, we all are not ready to train ourselves. And then we keep complaining why we are not in 5%. My dear friends, it's very easy to say that we are not in the 5%, 95% lose money, but it is irrespective of whatever careers you pick. Do you think everyone who is appearing for an IAS exam becomes an IAS officer? Yes or no? Yes or no? No. Do you think everyone who is appearing for IIT is getting IIT Kanpur and IIT Bombay? Is it so? Yes or no? Do you think everyone who is appearing for a CAT exam eventually lands up with an IIM Bangalore or IIM Ahmedabad? Do you think? Yes or no? No. So you got to understand it's not just with the stock markets. When you actually go and look out the probability of a person who becomes a CA in the first attempt, I'm not talking about multiple attempts, first attempt clearing everything, you would be shocked to know it's less than 1.5%. So you got to understand that we ourselves are imposing the barriers. Why? Because we are not training ourselves. So you got to first identify yourself. First identify in the asset classes in which you want to deal. Again, I'm saying it's not necessary you got to deal only with equities. You guys can go with options. You guys can go with commodities. You guys can go with currencies. You guys can go with US markets. You guys can go with N number of things. You guys can go with cryptos. Problem is we have not yet defined our asset classes. I'm 100% sure most of you may not have sat down with a calm, composed mind in a closed room and thinking about, oh, should I deal with this asset or that asset? The only reason why most of you are dealing with option selling in Bank Nifty is because that is the most promoted thing in this planet. Do you guys agree or not? Yes or no? See, silently everyone said a yes. Because that is, no, okay. You are an experienced person, you are an exception. Leave it. That's the reality. A lot of people are just blindly saying, why I'm trying to do Bank Nifty because Bank Nifty Guru on XYZ platform is making so much of money, so I can also do that. That's not right. So first, try to identify your asset class. Second, it's not necessary. I'll be very honest. It's not necessary that everyone just simply needs to do trading only. Okay? At some point of time, you need to give yourself a time frame. That, okay, I give myself 5 years timeline, 6 years timeline, but dedicated timeline. If I'm able to achieve my XYZ goals, it should not be just profitability, but it should be something else that, yes, I've learned, I can understand on all those things. That's completely fine. But if you are not able to achieve this thing, there's no harm to become an investor also. The probability of investor winning in a long run is much, much more than a trader. In fact, I would say most of us are trading for the kick. How many of you agree with that? Yes or no? Absolutely. Like, I mean, while I'm traveling, I don't need to even trade. I mean, I've created multiple income streams, almost 9 income streams. But why do I trade? Because that gives me the kick, that profit which I make. Rekha ji, while she makes some profits on Thursday, that gives her a kick. Am I right or not? So you got to understand that this definitely gives you a kick. So that's one reason. But if you're seriously considering, then work on your technical analysis. Once you are getting technical analysis, you can go with price action analysis. That is your take, price action analysis or indicator. Then follows risk management, money management, and strategy development, which the top 5% people are actually trying to do. Now I'll tell you very simple things. How many of you are ready to hear that? Just say yes. Louder, yes. Perfect. Very basic things. If you are able to do this thing. And I am going to leave you guys to do this homework because that is going to define how serious you are for your profession. Just go look into any of your favorite indices. It could be Nifty, Bank Nifty, Fin Nifty, but I would prefer anything between Nifty and Bank Nifty. Just go and start marking the previous day highs and lows. Very basic thing, very simple thing, nothing complicated. Just go and mark the previous day high and low. Turn the time frame into 15 minutes and just start observing what exactly is happening out there. You would be surprised to know a thing as simple as this could have saved you a lot of bucks, could have helped you to make a lot of money on a lot of these things. Let's take an example because we are talking about this thing. I'll just give one simple example. So these were, so this, wait, yeah. You guys can see the screen. So this was today's chart. I'll just do one simple thing. This is the previous day. This is where this closed. So what we're going to do is we're simply going to mark the high. I'm just putting 15 minutes. And so this was today's price action which has taken place. This was previous day. And in previous day, just mark. This is 29.3. Okay. So this was more or less the high and this is more or less where the lows were going. And now just look into this chart. Okay. I'm not explaining any mumbo jumbo. I'm not explaining anything complicated. Don't you think most of the bigger monstrous candles were happening at some crucial zones? Can you guys just visualize? Can you just see? Most of the monstrous candles which troubled a lot of live traders were happening at some very crucial points. You know, previous day high, previous day low. Now some of you might ask, but previous day high was 0.75, but this is happening at 2. Come on, market makers are not going to wait just for you that, okay, his trade is waiting at 0.25, so I should wait. Obviously, you have to use a bit of your intellect and live trading experience, right? But one thing is just go at your home and try to plot previous day high and previous day low for the last 1 or 2 months manually. And you would find into a lot of situations, a lot of price action happens over here. So the problem is we are not hunting for simple things. We are simply want to jump into most complicated things. Another thing you got to understand is monthly breakouts. What is monthly breakouts? It could have different definitions for a lot of people, but plain and simple. A lot of people are having buzz about Adani Group, Adani Group, Adani Group. All you could have done is, if it is below the previous month's low, try avoid longs. Can't we do that at least? We can avoid the longs as long as it's breaking any daily candle which was below the previous month's low. You could have avoided Adani Group. I have saved some bucks 3 years back in a cash stock called Rain Industries. How many of you have heard of that company, Rain Industries? Fantastic. I've saved bucks out there. Couple of other companies also. You got to understand, in the race to come into the top 5%, I always believe simplicity is what makes money, complexity is what sells. I repeat, simplicity is what makes money. Complexity is what sells. I know a lot of traders who simply do straddles and strangles. The only problem is they don't know that it is named as straddles and strangles. And that's why they feel that, oh, maybe some people are doing something else. But these straddles and strangle people are making huge money. They don't know that eventually they are adjusting positions just because they don't know the technical terms, but that is how they are making money. So got to understand core basics have to be clear. A lot of people, for example, today's example, today, when the markets are falling like a deck of cards, either don't buy or at least avoid. Can't we do that at least? Can't we do yes or no? So when things are falling, second thing, a common sense. If a trade is going against you and you're constantly averaging, what you are giving an indication to the market, I have been already wrong, I am accepting, but still, I want to play a gamble. Let me just see what's happening. And you're doing a bigger blunder. You got to understand, to come into the top 5%, you don't need high-end algos. No offense to anyone who's running algorithmic system, but this is the reality. For those people who think algos cannot go wrong, 2020, a lot of algos faced the heat because algos were working on backtested data. 2020 was completely surprising. In 2008, a lot of hedge funds who were managing billions and billions of dollars collapsed. The person who introduced the world to option selling, James Corrido, his entire hedge fund collapsed. The person who actually introduced Black-Scholes model. Everyone has heard, yes or no, Black-Scholes model? His entire company collapsed. LTCM is the name of the company. They were managing the highest fund. Why? It was not because they didn't have knowledge. It was because they ignored a simple word called risk management. They were taking 100x leverage. How can a 100x leverage, unhedged position, irrespective of whatever you do, you just need one day to wipe off your entire capital and then you will be like, I don't know why stock market is such a gambling place. How many of you are getting my point? Yes or no? So you got to understand that simple things. Another biggest problem. And just be honest, how many of you have done this thing? Just say I. You have taken some intraday or 1 or 2 day trade and now it has become an investment or had become investment. Just say I. Just see. You are entering with the purpose of technical analysis and suddenly you become a fundamental analyst. A lot of people entered into R Power, Rcom, Videocon, Idea, Vodafone, Yes Bank thinking, the stock is good. Yes Bank, 4th largest bank. I'll hold on to it, this thing. Since 200 to 150, 100, how farther it can go down. But you got to understand, 1 lakh, if you put in, I'm not talking about Yes Bank. In general, I'm talking about, let's say DHFL. 1 lakh, if you put in garbage, irrespective of how much averaging you do, at 5 lakh, 10 lakh, ultimately, it will become zero. And that is what happened in DHFL. One of my fellow friends had actually put 3 lakh into this thing. When DHFL came to 15 or 16, there was already news that it will get delist and bankruptcy and all those things. He's still confident. No, it will go in NCLT and then I'll get something and all. What was the thing? He had invested 3 lakh rupees, that became zero. Irrespective of where he had. It was better if he would have put that in ITC at least. He would have made some returns. I still say ITC is better than a lot of FDs. So simple basic things and correlation with a sectoral move. So in today's, a lot of people saw, I've shown the live positions also. I made 19%, but I'll tell you some rational. How many of you want to know that? Just say yes. Simple rationals. First rational, Bank Nifty was having more strength, at least at the start of the day, as compared to Nifty. But if you observe, Bank Nifty wanted to fly, but Nifty again and again was drifting below 17,000 core level. 17,000 was a place for writers, 17,000 was a psychological level, 17,000 was a level based on price action. It was giving a lot of indications that today maybe Bank Nifty wants to go up, but Nifty is not going to support. A lot of you, if at that point of time, instead of just looking into your positions, if you would have seen what was happening into the core banking stocks at that very moment, if you would have seen what was happening into the core Nifty stocks, you could have understood that they are not showing that much of strength and momentum as much as they could have shown. And believe me, I'm 100% sure there must be few people in this group only who must have bought puts or sold calls at that point of time. And while most of us are thinking that no one would have made money, they would have made money. So got to understand That simple core basics can also help you out to make a lot of money into the market and to remain in the top 5%. Another thing is over trading. We all are habitual offenders of this thing. Even a last trade, this is the last trade, this is the last trade. I know, being human beings, specific if you're doing discretionary trading, it's practically impossible. So try to adopt your own hacks. What could be those kind of hacks? For example, you can keep a separate account, let's say a 1 lakh account, 2 lakh account, and you can call it a chul account. In Hindi, chul means that whenever you are tempted to trade, you are just going to open that particular account, do any random trades over there, and just for the sake of that dopamine kick. We all said we want that kick. Why do you want to risk your 50 lakh, 1 crore, 2 crore account just for your kick purpose? I know that will give you more thrill, but if you just want to do kick kind of thing, you can keep a separate 1 lakh, 50,000, 2 lakh account and do whatever you want to do. Play hero zero every moment. Just see what's happening. Keep refilling that. But at least it is not going to put up a dent on your major account, and plus you will get a kick. So this is for those people who are positional players but still feel tempted to punch at least 1 or 2 trades every day. Keep that separate account. Second, if you're really that tempting, try to put sticky notes in front of your laptops. Now, when I was not that disciplined, I used to put that sticky notes in front of my laptop, which were abusive for me, that last time you did this, beep, bop, boop, bop. So make sure you don't do this thing. So every time that was in front of me, some of you might find it weird, but that was my hack. So you got to understand that you can find your own innovative psychological hack to avoid over trading. Try to set up a limit. Keep a pen and paper in front of you. That 4 is the maximum number of trades. Just put a tick, tick, tick. 3 is done, 4th is done. Just shut that screen. If you are still tempting, uninstall the app for that particular day, the very next day. And please make sure till 3:30 you're not talking to any trader. Don't look into any Telegram channel. Don't look into CNBC, Avaz, Z Business, any damn channel or a YouTube channel. Because if you see that at 3 o'clock, suddenly you will see, oh, this trade is looking good. Let me just at least recover the amount. And then again gone. Is it clear to everyone? Is everyone clear with this? Yes or no? So try to find out your psychological hacks which can help you to reduce the over trading and eventually help you out to come in this thing. Now, tips and service. So now some of you might say, that what about if someone is SEBI registered, what SEBI unregistered, maybe some people are good, maybe some people are not good. I'm not against tips and services. The problem is, once you start getting dependent, I think Ashish ji also mentioned about this thing that on Twitter, if you look into some trade and then you feel that, मैं भी इसके जैसे कर लेता हूँ, you have to understand the rationale. Problem is, we just look into one person's performance, we get influenced, and we start replicating the same thing. Unless until, have you ever seen a billionaire telling ki, "Arey nahi, I was taking tips from some tipster from Baroda and that's why I'm a billionaire today." Have you ever heard? Yes or no? Never, right? You would never find any billionaire or millionaire coming and telling you. Have you ever heard Warren Buffett coming and saying that, no, Omaha mein ek tip wala tha, usse main tips leta tha? Never. So the problem is not with the tipsters or anything. Everything is fine. The problem is you're not ready to analyze. So even if you're taking service, try to understand what was the rationale. If someone had given Adani Enterprise, Adani Port short at some XYZ level, try to find out what could be the rationale, what could be the chart, what is the volume saying, what is the profile saying, what is the sector saying. That is exactly what you got to do. The problem is we don't try to find the rationals and we are trying to look for shortcuts. Now there is a VWAP theory. I'll quickly show it on the screen. Very simple thing. And let's get to, during the live trade, I anyway said this thing. A very simple thing what you guys can do is, just go on any options 5-minute charts, okay? Remember, disclaimer, this is not a buy or sell recommendation. I don't know why I've become habitual of giving disclaimers. But anyways, this is a plain VWAP and now you can find it in any broker, any damn broker. Always remember, irrespective of whatever trades you have taken, it could be buying, it could be selling, whatever direction, if VWAP is not supporting your direction, just exit. Plain and simple. No additional rule. What does it mean? So it means this particular candle, let's say 40,300 put, it is coming down. That means the market, if the skyrocketing which happened, can everybody see that this came down below the VWAP? Yes or no? A big, thick red candle, these are volume candles. If it is coming below this thing, irrespective of how bullish you are, at least, even if you are not bullish, at least you could have exited your shorts. Yes or no? Louder, yes or no? The problem is, some people would wonder, how can this be so easy? Just below VWAP, we should exit. That's the problem. Our human minds have become so wired to complexities that until unless I don't use 5 Greek words, until unless I don't speak 7 words in Latin, you guys would think that no, this is not possible. But believe me, any trader who is making good amount of money is not using complicated systems. What they are trying to do, the 5% people, first they are building their own system. They're not relying on everyone. Everyone has a different this thing. Today I had interaction with multiple people. Some people are using Elliott wave theory. Some people are using quant-based theory. Some people are using delta hedging. Some people are using intraday theory. Some people are doing scalping. Just form your system first if you want to be in the 5%. And your system, it could be discretionary, it could be manual, it could be algo based, should have clearly defined rules. What is your stop loss? What is your target? What is your position sizing? When are you going to cut your positions? How many of you face this trouble? Let's say you buy a stock and the very next day, it suddenly gaps down and now you don't have any idea where to exit. How many of you face this problem? Just be honest. You have faced this? So here's one simple concept which you guys need to follow. There is one thing called stop loss. Also start following an emotional stop loss. Like at least I follow. And I again repeat, I'm not the best trader. What is that? So let's say if I have entered a stock at 100 and my stop loss was 95 on a positional bet. And I decide that based on whatever capital allocation I have done, 92 is the worst case situation which I can handle. Next day, if it is gapping down and it opens at 90, I exit at market order in the first 5 minutes. If in the first 5 minutes, it is not reclaiming 95. First 5 minutes. Why? Because I want to have a fresh slate of mind. That's the most emotional pain I can take at any point of time. Problem is, because my stop loss was at 95, now it is opening at 88. What to do? Should I wait? Should I wait? Should I wait? By the time you keep waiting, it will drift down to 80. And now it becomes an investment. So you got to understand one simple reason. This is particularly what happened in the DHFL case. DHFL was quoting around 600 or something if I'm not wrong. That gap down, it came down to 400, some 420, 480. And then suddenly on that day, a lot of people say, what if it gaps down like 60, 70%? Never in the history of stock markets, I don't say that it will never happen, in a single first minute candle, it has gone down. I'm not talking about SVB, let's ignore that. But unless there is no news, and if you're going with this thing, in the first 1 minute candle, it will never open to, unless it's a small cap, it will open like 70% down. So you always get an opportunity. So try to define your emotional stop. This is the max I can take. I am going to enter a market order, shut down the screen, go and play with my kids. Otherwise, if I want more focus or maybe I want to distract myself, I'll fight with my wife or husband, whatever. That is how you're going to engage your mind. You got to understand this thing. Is it clear to everyone? Yes or no? Great. And so VWAP theory is also clear that if it's below VWAP, we are completely going to ignore this thing. Then we have the moving average and the RSI theory, plain and simple. Some simple things can help you out. So for example, if a particular stock is below 50-day exponential moving average, simple thing. If it is below 50-day exponential moving average, try avoid buying. Try avoid buying in this thing. Now you would say, bas itna, yes, itna. I'm not saying short. Listen to my words carefully. I'm not saying short, but avoid buying. The very fact that it is below 50 moving exponential moving average and it's a standard stock, you got to avoid. Some might say, I was actually tracking a penny stock and that penny stock, which was quoting at 1 rupee, is now below the 50 moving exponential moving average. I would rather say, please don't use technical analysis on penny stocks. Want to know why? Want to know why? Yes or no? The reason is because technical analysis works on mass behavior. Penny stocks anyways don't have a lot of mass behavior. So how would that reflect on the charts? So you got to understand, if you really want to catch up trends, you want to catch up and play long into the game, you need to have solid volumes and mass behavior. So, and what is the RSI theory? How many of you have heard that RSI of 80 or 70 is overbought? And what is RSI below 30? Oversold? You must have heard. But do you know, if you go and check out the daily charts of stocks like Reliance or maybe ITC or something at their peak period, you would find Adani and everything, they have been above 60, 70 day, this RSI for significantly long period of time. And I'm pretty sure at that point of time, anyone who was shorting those stocks must have sold his Haveli, Ghar, Gadi, everything, right? So got to understand one thing, that RSI is also telling you about the trend momentum. And when we are talking about trend trading, we always say trend is your friend. So when trend is your friend, I don't think so. When the RSI is trending upwards, you should actually short. You should rather wait for it to drift down. Now the problem what happens is we are still reading old age books which were printed 25 years back, and we are still referring that oh no, 80 above is this and that. And the second problem is a lot of you are actually understanding from people who probably have never punched a single trade in their entire life. So for them, the bookish theory is fairly simple, that okay, 80 above, you just need to avoid. So please try to understand, when RSI is trending and this thing is trending, you got to hold it for a significant period of time. Keep some psychological hacks if you really want to be the 5%. These are some of my quick hacks. So for example, if I have set up a XYZ limit on my main account, if I'm down by 1.2 lakh on any particular day, which is still under my control, under my parameters based on me, what I do is I simply shut it down. I do either I go to Twitter and I try to create memes. That's one fun part which I do, for which I get trolled. That's a different story. Either the second thing is I completely shut down. I go to my tab, I open it up, and I watch maybe Mirzapur or anything which is completely uncorrelated. Because if I watch something like Big Shot or something, it might again tempt me to go and trade on that particular. Bilkul. So for that I particularly avoid. So watch something uncorrelated, or in most of the cases I go out for travel. That's particularly what you do. So that's my Netflix hack. Travel, as I already said. Follow a cushion concept. This is something which I particularly do. What I try to do is, if I'm doing day trade, so for example, today, although I clocked in 19%, which I've showed, the first thing, those who are sitting close to me, they have seen this thing, was a positional trade. I had actually sold 17,150 call on the upper side, and on the lower side, it was 16,850 put. I had sold it, like I was carrying it for 48 hours. So I had sold the call for 63 or 64 was the average. On the lower side, it was 33 or 32. The morning open itself, I was getting one for 5. Another one was for like 6 or 7 rupees. I had created my cushion. Even if that was not a position which I had carried, the very first trade, I'm not looking for 1:3, 1:10. My first trade is to make some profit at least. Okay, it could be as little as 10,000 rupees, so that I have a relief, psychological relief, that okay, I have a cushion now of 10,000. The next trade, I can risk that 10,000 even in that option buying, but I have to make sure that I am not risking 1 lakh or 10 lakh rupees now just after making 10,000 rupees. To try to devise your own cushion strategy. The first trade doesn't need to have the best strategy, best setup. It could be above average trade or medium trade. And I'm telling you, anyone who has been day trading for a particular period of time will every day knows by looking at the screen that is trade mein mere ko 10 point to mil jayega. I will get at least 10 points over here. So even if you're not getting 10 points, 8 points also you get over there. That is a decent pickup for you. That's how you build up a cushion. Abusive journals. So my journals initially in my career used to be very abusive. They used to be typically in Hindi. कि तूने आज ये कर दिया था साले beep, because of which this thing happened. Every Saturday and Sunday I has to revise those things. Revise in the sense I just need to understand this thing. How many of you, let's see, a lot of people had raised their hands, they want to be in the top 5%. Let me ask you, how many of you don't have a trading journal regularly maintained? Just say yes, just be honest. कितनों के पास नहीं? Yes बोल दो, हाथ मत ऊंचा करो. Yes, so many people raise hands. See, we ourselves are answering our problems. We want to be in the top 5%, but we are not ready to put in the efforts which is required to come into the top 5%. I used to have journals. Right now, honestly, I don't have dedicated journals. But yes, I used to have to skill this game. And I'll give you a very simple answer. Why you need this thing? I'll give you a simple example. So let's take an example. Ma'am, 3 days back, what did you have in lunch? You have 3 seconds to tell. You don't know? Okay. Boss, what did you have? You don't know? Just imagine. 3 days back, what we had in lunch, we don't know. How the hell we will know what trades did we take 3 days back unless it had blown up our account? Agreed? Yes or no? So you got to understand, we always overestimate our brains, that we remember everything. The only thing we remember is the first time we saw our crush and the first time the teacher reprimanded us and gave us a 0 in our maths class. Other than that, we don't remember. We are just overestimating ourselves. So the problem is, that is what happens. The next time when we are taking a trade, we feel that no, last time though when I took this kind of trade, I made money. We didn't realize that 10 times we had lost money in the same setup. and only once we had made money. That's why try to have a journal, even if it's not abusive, and stop replicating social media results, which the previous session also had focused on. Every individual is different. You got to understand. And let me give you a simple example. Paul Tudor Jones used to use Elliott wave theory. He had made money. George Soros, recently into news. He has made everything into currencies. You could talk about Jim Simons, quant genius. He has made 30 years, clocked in 66% CAGR. He has made money through quants. You talk about a lot of people are WD Gann. I know everyone is having a controversial side, but WD Gann has made money. Then there was this dancer, I forgot his name. Which one? Nicholas, he has made money through his own unique system. So got to understand that it's not necessary that you have to replicate. What I always say, take inspiration, seek inspiration, but don't blatantly copy. I, at some point of time, irrespective of having so many years into the market, in the initial days of social media, like 4 years back, tried to replicate a few fellow traders who are having different trading style and good aptitude, good risk appetite. I faced the heat and I realized, nahi, Abhishek, jo tu kar raha wo sahi hai. Let's focus on what you are trying to do. So that's important. Stop replicating, otherwise you won't be in the top 5%. And keep everything into 3 in radar. There is a very beautiful concept of 3. In India or wherever you go, 3 is a very common number. We have 3 Murti. We have 3 gods in Hindu religion, with due respect to every religion, but it is Brahma, Vishnu, Maheshwar we talk about. We always say 3 tigada, kam bigada. We don't give 3 almonds to anyone. Likewise, here easily you can remember, you have to work when you are working towards the 5% club. You just need to have 3 things. What is that? If you're dealing with stocks, specifically intraday or positional, just keep 3 stocks, highly liquid. It could be Reliance, HDFC, TCS, whatever. Keep 3. Why not just 1? Because what if the liquidity fades into one particular stock for a significant period of time? ITC, before breaking out for 5 years, did nothing. If ITC was just one stock which you were tracking, obviously you would have been the top 5% because you didn't lose money, but still you wouldn't have made money either. So 3 stocks, 3 asset classes at max. A lot of people just want to jump into everything. Just keep 3 asset classes at max. 3 indexes. I would say just keep 2 at max, Nifty and Bank Nifty. Beginners should focus only on Nifty. A little intermediate players can go with Bank Nifty. So if you are someone who is trying to become Akshay Kumar, Khatro ke Khiladi, you can try Bank Nifty, but that should be after a certain period of experience. It is only meant for people who have heart like Rajni sir and all these kind of people, because Bank Nifty should not be used by the beginners. 3 p.m. square off anyways, brokers are giving you at 315, 320. It's always better to square off. So that, because see, if you have not made money till 3 o'clock, thinking that suddenly a move like today will happen every day, it's not going to happen every time. At max 3 indicators. I have seen a lot of charts which are more than a trading chart. It's more like a Picasso painting. You will find 18 indicators. There are 3 moving averages, 4 super trend indicators, 2 VWAP, 5. What would you see and take a trade? And that is how indicators get defamed. All you need an oscillator, all you need a momentum indicator, and maybe volumes. You can switch between these things. 3 are good enough and use price action with that. As simple as that. So try to narrow down everything till 3, and this is what you need to become a consistent winner. Try to find your edges. I always say this thing. If you go into the Hindu religion, please don't mind. I'm not trying to emphasize on any religion or something. I'm just giving example, a standard disclaimer. If you go and look out Lord Shiva uses Trishul. Don't you think he knows how to use other weapons? He knows every weapon in this world. He still uses Trishul. You talk about Hanumanji. Hanumanji is using Gada. Do you think he doesn't know how to use other instruments? He uses every other instrument. But he still focuses on Gada. Why? Because these are their edges. This is where they have the most perfection. So yes, you can be good into 30 different strategies, but please focus on a select few. Next, predefine the risk. The problem is, after coming into the market, when you start defining that this is the amount of money I'm ready to lose today and this is the amount of money I'm ready to make today, that is completely wrong. You have to pre-decide that today I'm going, at max I'm going to lose 2%. At max, please don't define the limit or the profit. It can go as big as possible, but 2% if you are defining, that should be the max thing. You have to Act on your edges without any reservation and hesitation. Pay yourself as market moves and money available to me. Acha, a lot of people don't reward yourself. That's where the motivation is already down. Trading anyways is a profession where a lot of people are not going to motivate you. So you got to understand that whenever your trading account is performing well, try to reward yourself. That is what is going to help you to give that additional kick. That yes, last time I made money, so I was talking to someone, last time I made XYZ money, I immediately decided to buy a plot. Why? Because that was at that point of time giving me XYZ of kick. It could be buying a gift for your wife. It could be giving a party to the entire family. This is what going to help you out. Continuously monitor your in making errors, and absolute necessity that consistent success. Consistency is a word which a lot of people are trying to ignore. So far clear? Just say yes or no. Yes? Louder. Yes or no? Perfect. And then, I know I had 1 hour, but I'm not going to take an hour. I'm going to quickly sum up and then take a few questions if you have. Moonlighting isn't an option if you really want to become a full-time trader. A lot of people who are working into ITs, they feel that, I can do hardcore scalping and intraday trading by sitting into my IT department. You can learn trading. You can evolve as a trader. But if you really want to seriously become a full-time trader, I think at least for those 6-7 hours, even if you're not sitting in front of the screen, you need to be a little focused. Problem is a lot of people who are doing jobs just by looking into some article and thankfully a few YouTube videos, how you can make 1 crore through 5,000 rupees, are actually getting distracted. Those are not practical things. So you got to understand a lot of people, and anyways, if these days you're doing moonlighting, they are anyways going to sack you from your company. So please make sure that you don't do the moonlighting part. And finally, this was, I think I took it from Trade Station or something. This is exactly how the traders actually come from this thing. All traders start with the dream to get rich quick. 40% trade only for 1 month. This is why obviously because after that they have significant amount of losses. 80% quit within the first 2 years. Only 7% remain after 5 years. And this data is from US. So don't be surprised when SEBI has come with a report, because it's not just happening in India for traders. Something similar is happening worldwide because we all are slaves to our emotions. And irrespective of which country we stay in, we all are emotional fools. So you got to understand this is exactly this thing. And final reason, my dear friend, this is the most important thing. Why you guys are not in the top 5% is because you're not following Abhishek Kar on these social media channels. So thank you so much. And if anyone has any quick questions, I'll take up and then I'll pass it on to the next speakers. Anyone, any questions? Pujiye. Okay, so his question is, how does the money management actually changes when you make profits or versus you make losses, right? So first of all, you got to understand that you got to run with a set of rules that should be predefined. What we are talking about, it has to be predefined. Predefined in the sense, let's say you have 100 rupees and you make a profit of 10 rupees in a month. I'm talking about, let's say in a month, that is 10%. Now, every time, every month you have to reaccess based on your current capital size, current this thing and current strategy, that now what are the number of quantities I need to take at this point of time. So every month, try to re-access what exactly you want to do. And when you're talking about money management principles, you can keep it very simple. So for example, my rule is, let's say if I am dealing with option buying, if I have a 30 lakh account, example, and let's say, first of all, I was talking to someone, I don't deploy entire thing, I divide it by 1/6. So if I have to buy option, I'm going to buy options worth 5 lakh rupees. I have a 30 lakh account, I'm buying with 5 lakh for the first time. Now, the beauty of this thing is happening is, let's say I bought an option for 300 rupees and it slips down. It is going down, it's going down. Based on price action and everything, if I'm doing a scalp, I can at least monitor where I'm going wrong. Now, let's assume in the worst case situation, even if I lose 1 lakh out of there, I'm still into the game. I'm considering the worst case. So you got to define your rules right from the beginning. If you're into loss, the first thing you need to do is reduce your position size. Because your confidence is already shattered. I'll tell you, when you lose money, the loss is not just monetary. The biggest loss is of confidence. your confidence got shattered. The bigger the loss, the bigger is the shattering of the confidence. You know, human beings can't take losses. You know, there's a common theory that says you lose 100 rupees versus you make 150 rupees, you may not get so excited with a 150 rupee gain as much as you will get depressed with a 100 rupee loss. So you got to understand, my simple thing is, irrespective of whatever you're making, your rules should be predefined and your rules should already take into consideration about profits and losses. So I'll give you a very simple example. So let's say if your capital is relatively smaller, you can set a rule. If for 3 consecutive days I have made losses, instead of money management, do mind management. Take a break for the next 3 days. Don't trade. The problem is on the 5th day you will trade. The day you will start mastering that, things get sorted. Got it? Yeah. Anyone else? I guess the presentation has already answered a lot of this thing. Any gentleman out there? Yes, sir. Okay, so this is a very interesting question, and this was asked by one Shishir ji from Money Control also to me. I'll tell you one thing. So when you are into euphoria or when you are into depression, in any of the case, you always have to ask yourself that are you into a same state of dealing with the future position. So let's say you are habitual of making 10,000 rupees, but today you have made 60,000 rupees, which is way beyond your imagination. Mostly what people will do is, now I have 60,000, so let's take some more risk and let's make some more money. And by 3:30, that 60,000 is also not left. Instead, you will be at like maybe 1,000 profit or something. So the rules should be predefined that the moment I have made good amount of money, and if you're not into a control, and if you start feeling yourself, you always get that feeling and the vibe that I'm godly. But both losses as well as for euphoria, take a break of at least 1 or 2 days. Cut yourself from the market for 2 days completely. Another thing, if you still want to be in the market, there's another thing. Let's say you were dealing with 5 lakh capital. The day you have this euphoria, instant give a payout of 3 lakh rupees. Give a payout of 3 lakh rupees, deal with 2 lakh rupees. That is the only way. But once you give with 4 or 5 days and you know, okay, now I'm able to manage, you can continue. Okay? Okay. Achha, you have a question? Quick. Yes, I do add to winning trades today. So initially the first position I made 3%, which everyone, till 8% everyone has seen in the live market. After that, because when that dip actually happened, I didn't make money on the upside, up candle. When the dip was actually happening, I was adding the positions on buying on the puts. Now I made one point very sure that I am not buying OTM or ATM because it's an expiry. And to be honest, I get scared on these kind of expiries. So what I was trying to add is a 300 point, 400 point inside in the money option. I was trying to buy those things. Things were working into my favor based on my price action. And as we already saw VWAP magic, so it was also favoring my VWAP, simple rules. And I kept on adding. But yes, I do have certain limitations. So for example, let's say I have some prefixed rules. It depends on the account I'm managing at this point of time. So in this particular account, under no circumstances, I would add more than 200 lots, irrespective of it's OTM, ITM or whatever. Anyways, it won't even go with 200. I would say not more than 150, 160 lots, I wouldn't add. So you have to define this thing, and I do add. That's how you make money. Pyramiding is what we call. Okay. So guys, because we are running out.
I have a question, last question. Sorry.
Sure.
I know might be running out of time probably because of the last session.
No, I have completed in time, by the way. But
yeah. No, you are in time, on time, whatever time.
yeah.
So ahead. First of all, you talked about dopamine hit. I relate to it very closely every 2 hours. I think you know why. Okay. Question for you. Why haven't you traded crypto so far? I mean, if you have it, I don't know, but
I have traded to a bit, but I'll again come in my presentation. I talked about one word called edge. I realize that is not my edge. I'm never, so if anyone is saying that crypto is FAD or this thing, I don't agree on that. Crypto has huge potential and he is a living example for that. And there are many, I know, I guess even a few of my fellow friends who are sitting behind, they have also made good money. The problem is maybe I wasn't as comfortable in this thing. And by the way, DJ, let me tell you, I got a little scared 3 days back because I have a wallet in Binance. I have cryptos of something. And then some Binance news actually came. So I texted some of my crypto enthusiasts. I hope it's not closing down, right?
Binance, sorry?
Binance had some news, some investigation now is going on.
Yes. See, that is one reason. In fact, tomorrow when I make my presentation, I'm going to talk about what I deem safe. What I say is not going to be written in stone, not going to be biblical truth, but I would never trust centralized exchanges at all, like Binance or any other centralized exchange all over the world. Binance, for the record, is the biggest exchange on the planet as of today, by way of volume, market cap, anything you name it, in terms of number of coins listed on their exchange, everything. But still, I would any day trust a decentralized exchange. Like there are plenty of them. Camelot, Vela Exchange, Apex Exchange, Deribit. Plenty of them are there. You only need to go. I mean, you can even look at these decentralized exchanges like Pancake Swap, Uniswap. Plenty of them are there. You just need to do your research.
So I need to attend that because so I'll tell you why I'm not watching crypto is because last I had in Binance was $24,000 worth of crypto.
Okay.
And one fine day I just opened, I could see it was $18,000. I shut it down and then I closed. I mean, it's still there, but I'm not
No,
watching.
see, what I would recommend, in fact, tomorrow I'm going to talk about it, is I would recommend use the centralized exchanges for on-ramp, meaning convert rupee fiat to crypto. That's it.
Sure.
Yep.
Sure.
That's it.
Thank you so much, everyone. I hope you learned something. Thank you so much.